Okay, very good morning. I hope everyone is well. Tuesday 29th of May. Hope you enjoyed the long sunny weekend. But back straight to it, the topic of discussion this morning, European politics and the ongoing kind of risk-off sentiment that is creating given multi-month lows when it comes to the euro currency, European equities on the back foot, led by the FTSE MIB underperforming, and then a widening in the Italian Bund spread as these concerns linger. So that's what I'm going to talk about. Then I'll hand you over to Sam and he'll look at the charts as per usual from a more technical perspective. But as you can see, as just mentioned, euro weakness, underperforming, euro dollar down about 72 pips already. And remember, UK participants back in fully to the market given the public holiday yesterday. But just looking on a longer time frame, the euro currency just coming down back in toward close proximity to the November 7th or low, which is seen not too far from the current price, and that having some technical relevance given the peak that we saw kind of the beginning of Q2 of 2016. And so this Italian situation, Spain, Brexit, all these different factors which we're going to have a look at or continue to remain in focus. Cable, likewise underperforming. Dollar index is up about 0.2%, and in the cable chart, longer time frame, also quite an interesting level here, just being looked at this morning at around the 133 handle, of which we trade just beneath. We're trading on 32.81 in the futures, and that being a move then below the mid-December lows. That kind of point of resistance through much of Q3 of last year, and then the high that we had in the summer, August of 2017. So yeah, so quite an interesting setup to get the week underway. But let me get straight into the news and I'll let Sam discuss the charts in more detail. So main topic then is Europe's fragility is exposed once again, and actually I quite like the way that there's a Bloomberg article that kind of sums it up. It was only a couple of weeks ago we were talking about the best economic growth in the euro area for the best part of a decade. People were kind of celebrating this first signs of real economic growth in Europe. The ECB were at the point of talking more hawkishly, and how the tables have turned over the course of the last kind of 4 or 5 weeks. We've got this breakdown now, which we'll discuss shortly in Italian politics. You've got now a new Spanish vote of no confidence, which they said yesterday is going to happen this Friday. You've got the ongoing situation with Brexit. You've got numerous strikes across France as Macron tries to implement his economic reforms. You've got this whole EU-US trade war also ongoing, and then the situation in Turkey as well. So, a lot of things have come back to the forefront to spark this kind of renewed political uncertainty, despite the economic improvements that were being seen. And as such then, it's causing this quite swift repricing of market prices. You can see here the DAX, as I'm just talking, under further pressure, in US futures following in sympathy here. So again, the moves may be a little bit more pronounced because this is really the better volume, given we're just coming back to the market today with the bank holiday yesterday and people reacting to this news for the first time. So again, euro just touching on fresh lows here. So what is the situation and what is being going on? Let me just give you a run through of some of the headlines. So populist leaders, so looking at Italy first, are expecting to take power attacked Mattarella for the collapse of their planned coalition, suggesting an international conspiracy directed against Italy. So basically what's happened at the weekend is the Italian president has asked a former director of the IMF to form a government and prepare for new elections. And this chap being here, if I just bring it up, his name is Cottarelli, who's seen as a technocrat. But what's happened here is that the two parties, so the Five Star Movement and the League, are incredibly unhappy, and they're saying that the president in Italy has basically overstepped his mandate and going against their will, and so therefore the Five Star Movement have called for potential impeachment of the president in Italy. So not only have you got a risk of new elections, you've kind of got this tail risk of an impeachment against the president. However, in order for that to happen, the process to remove a president from office in Italy is both lengthy and includes the appointment of an external commission, a successful outcome of which the populace, which is seen by the market as the populace having to achieve that, is incredibly unlikely, but obviously just creates more negative hysteria in the short term, I would say. So a few other things to have a look at here. This is asking 6 essential questions about Italy's political crisis. So, as I said, this is a former executive director of the IMF, Cottarelli, who they're talking about, who the president has said to form a government of which the Five Star in particular, but both the League, are unhappy with. And so basically their push of this coalition government has completely broken down. Now, you might think that this is a positive. That was the way the market had been reacting. So it kind of pushes back against this populist ideal. However, this kind of then domino effect about what it's mean for new elections, impeachment talk of the president, has all created this renewed risk-off environment. When would the new elections take place? Well, the Italian press have been speculating as early as September, some putting around the date of September 9th. What would happen here? It would mean that you'd have a caretaker government in Italy. So this chap, Cottarelli, would then govern until that point in time. However, as you would expect, you kind of sit in a status quo and really not a lot gets done. And in that interim period, you've got the G7 summit in Canada in June. You've got the EU summit, key one on Brexit, happening at the end of June. You've got Italy preparing for their 2019 budget, which has to pass through Parliament by the end of the year. And so all these key pivot points, particularly the latter one about Italy's budget for next year, with this political uncertainty, just means people start to panic short term. And then what we have been seeing, well, this is the Italian 2-year bond yield. I mean, that's just incredible how quickly that has soared in the last few days. I mean, look where we were in the beginning of May. This move really has only come in the last 7-8 days or so. And the 2-year Italian yield breaking through 1% for the first time since 2014, and up 1 percentage point from Monday's market close as well. So it continues to see upside there. One of the other things, though, it's not only about Italy. There's also in the backdrop a lot of discussions about Spain as well. So Spain's opposition Socialist Party, they basically introduced a no-confidence motion in Rajoy after a series of corruption scandals have engulfed the PM's party. Now, one thing to be aware of here is most analysts that I've been reading in their notes this morning say that Friday's vote, when that's going to take place in Spain, is unlikely to be too disruptive, in part because there's little agreement between the major parties in how exactly they will topple the PM, Mr. Rajoy. So it looks like there's been a push for this vote of no confidence, but such is European politics being so fractured within these domestic nations, is that essentially there's no outright support for one party, which means then they need to come together in a coalition, if you like, of different political views, which is incredibly difficult to get everyone on the same page, of course. And so actually people saying that Spain, maybe not too much of a risk at this point, but certainly just adds to this narrative of negatives that are concurrently ongoing in Europe. Not to mention those other things that I mentioned, things like Brexit. Turkey is obviously still unfolding, and as I said, France going through quite a drastic change, which is typically leading to nationwide strikes, particularly for the train services, which obviously employ a large portion of people, given these economic reforms and so on and so forth. So yeah, things just coming to the forefront this morning, and so as a net result, starting off with a negative risk-off trade. Euro under pressure, chiefly led by spike in Italian yields, widening in Italian Bund spread. European equities under pressure, and so you're seeing a flight to quality move in terms of fixed income futures. Bunds up 60 ticks, T-notes up 16.5, but gold relatively unmoved. That's still sitting tight around the $1,300 level for the moment. So that pretty much makes up the main bulk of really what's in focus, and I think that these stories are probably going to dominate the sentiment, at least for the first half of the week, if not the entirety of the week in itself. The other thing, of course, is looking at oil. Just having a look, we're trading at 66.73 at the moment, so we've continued to see a strong pullback in crude oil of late. This is the article that most people are looking at, and it's just a continuation of the same things we were looking at the second half of last week. It's talking about Saudi and Russia output revival plan has rattled the market. So this is talking about Saudi Arabia and Russia. If you remember, on Friday they said they may restore some of the output halted as part of a deal between OPEC to make up for potential losses from other members, notably Venezuela given the political unrest, and Iran given the threat of these new sanctions that are coming. So just looking back at oil here, I mean, it's been a real aggressive sell-off that we saw going back to last Friday. We basically fell from the 70 handle all the way down to 66, and then we've consolidated there since. But looking on a daily chart for a slightly longer time frame, you can see here there's quite a key level, basically where we've got to at the lows. So I think it's quite reasonable that the price has consolidated here at this area. I don't think that's massively surprising, because if you look, although we have run lower, we've recovered now back to exactly that sweet spot, if you like, of where price activity on two prior occasions has hesitated on that rise that we saw at the end of last year and the beginning of this year. So that's quite a key level that we're trading in oil at the moment on a longer time frame, and whether or not that this level will hold for the time being. This pullback that we've had from really the high that we printed at around $73, now that we've repriced by about $5, has this now taken into account that increased amount of output from Russia and Saudi, which they're saying is just to make up for a shortfall for Iran sanctions in Venezuela, if that makes sense. And if economic growth can continue, then this could be a pretty good floor. And have we just repriced in the new norm now? And with the OPEC meeting about a month or so away, this will now be the bottom of this range until we have that meeting. Quite key to see whether or not we can close below here in the next few days. All right, a quick look at the calendar for today and this week, and I'll hand you over to Sam. So looking at what's on the agenda for today's session, I would say economic data, really, if you're looking at the calendar ahead, there is nothing of significance. This just makes me think that the market's going to focus on this European political situation even more, because there's no short-term obstacles from an economic data point of view. From speakers, again, even though you've got Mersch, Lautenschlager, maybe Lautenschlager is the more interesting one, given that she speaks about monetary policy in Frankfurt and in the context of this political situation developing in Italy and Spain. That's probably the one I'd want to look out for, because it's on topic as well. But again, the calendar is light, which means all the more focus then for the bigger, broader macro driver, which is the breakdown in these European political situations. Looking at the week ahead, moving on to Wednesday, a couple things to be aware of. We start to get the various data points indicated to the US jobs market in the run into non-farm payrolls on Friday. So we got ADP on Wednesday. You've also got the FOMC minutes. And then looking further on as we go through the week, Thursday, US core PCE, Chicago PMI. So a couple of interesting things there. You've also got Eurozone prelim CPI, which will of course be one to watch. And then the manufacturing PMIs end of the week, the Spanish vote of no confidence. You've also got the it's kind of global PMI data, such as always the case at the beginning of a fresh month, which will be the end of the week. And then you've got that culminating in non-farm payrolls, which we'll get on Friday. We'll talk about all of these though in more details as we go through the week. Okay guys, going to leave it at that, and I wish you all a good day. I'll see you in the chat room. I'll hand you over to Sam.
Hi guys, good morning. Hope you all had a good weekend. To start off with the S&P, obviously keep an eye on euro and pound, which are both just coming to their lows as well. But S&P just coming to a pretty important level that we've sort of been testing this morning. Well, actually, as of now, really, a bit of support found last week, and then even the week before that, and a decent level just below where we're trading now that we had on the 15th, which marks up quite nicely on the futures with today's S2. So equities under a bit of pressure, both in the US and over here in Europe. So big level just being tested now as the political tensions and whatnot just coming into the market this morning. It's finding a bit of support purely technically on that level. Have a look over at the Nasdaq as well, near that low of the day, and Dow Jones similar as well. Probably a bit more room to go to the downside. Well, actually, I suppose it's tested the low of last week as we're speaking just now as well. Speaking of the dollar, as I mentioned, euro and pound is coming to their lows. You've got the dollar index as we're speaking just pushing to a new high. So euro and pound both pushing low, and I'll come back to look at those charts just in a bit more detail. But again, worth noting that you have the Aussie dollar not as interested in the push lower. So again, you know, that thought process that maybe we have reached a bottom in the Aussie dollar isn't, you know, the worst sort of idea in the world. So you can see again starting to go a bit sideways, those lows getting higher into sort of the close of the week as well. So while the dollar, you know, is still strong this morning, Aussie dollar not as interested, and same for the yen against the dollar. So here we've got the yen strength to the upside. You can see that is on the high of the day with equities under pressure. You've also got the T-notes pushing to a high, but importantly, from a correlations point of view, just one to be aware of, you do not have gold on the highs like T-notes in yen. So perhaps coming under a bit more pressure due to gold there as well. So technically, if you're looking for, you know, a sort of a safe haven play where, you know, the yen and T-notes are going higher, don't necessarily think gold is going to move off that at all. Just coming back to the euro, where could we, you know, really get to if we have a look lower here? This is a 480-minute chart. You really still then got to make it, you know, a longer time frame just to get the next level of interest. And we're just here on the, you know, the futures continuation here, 7th of November. That low very much in sort of target now. There you go, 115.79. Not too far away from that from a technical perspective. You'd expect a bit of profit taking around there. Intraday, if we're looking for a pullback place to go short, obviously the previous low, the Asian session, which we have broken through just before sort of 7:30, could be of interest. And of course, you know, 116 S1 previous low, that area as well should offer some resistance if we were to retrace back. But for now, it doesn't seem like that is going to be the case for a while. So I'll be focusing obviously on this next big level from November. For pound, similar sort of story in those Asian session lows breaking, and was also the sort of the low that we had of yesterday. You can see that nice breakthrough retest of the previous low of the day, and now S1 breaking to the downside. Levels to be aware of, so quite a key break of the December and middle of December lows, and next sort of key area from a, you know, market level perspective would be the low that we've got around here from November as well. But a bit more room perhaps for it to go down to. You've obviously got today's support to just before that, but similar with euro, you would expect a bit of profit taking from that point. Euro pound this morning, well, in the last sort of hour, quite undecided about where to go. You know, both these pairs coming under pressure as the dollar continues to strengthen as well. So keep an eye on euro and pound. If you're looking for that dollar strength, Aussie dollar's not the one that you really want to be focusing on. Albeit the previous low of the day has acted as a good resistance level. So, you know, obviously the dollar is strong. It's not to say that you want to be looking to buy Aussie dollar right now, but perhaps when the dollar also just weakens a touch, Aussie dollar could be the more rewarding one. As you can see, not as interested with this move lower that we have seen. Euro stocks as well. Have a quick look over before we have a look at the DAX. Key level coming up that we've got marked up here on the 25th of April, another key level. So equities just coming under a bit of pressure, but key support levels not too far away. Here we've got the FTSE CFD, so excuse the sort of the gaps in the market, if you like. We mentioned a couple of times last week how it'd be a good opportunity perhaps to look for a medium-term short, and that's coming off quite well. You also had the obviously previous all-time high broken through, and we closed underneath on Friday last week. And you can see that's continuing to push down this morning amid all this sort of political uncertainty, as mentioned. The DAX pushing lower, as you'd expect, but that key level just actually having a bit of a breakthrough. I guess you've got this more as an area than an exact level. You've got the previous highs that we then broke through on the beginning of May, but just sort of testing the lower end of that now. So quite a key level all over for equities as we sort of speak. Let me just mark that up there. You can see that just being tested. Retracement, obviously S2 not completely out of the question to get back there shortly. Key levels you would be looking at yesterday's and today's sort of lows as potential points. Whether we get back up there, I wouldn't be too sure. But the DAX is the DAX, and it wouldn't completely surprise me if we did make a new high today for that. But just keep an eye, obviously, on those pairs. Euro and pound still near their lows. Have a quick look over at oil as well. As Ant mentioned, quite a key level that we sort of made a low around. You've got the highs of the 25th and 7th, lows the 17th, just below where we made a low yesterday. Going sideways a bit for now on the lower volume, so one to perhaps focus on later on if your directional bias is undecided, and obviously nothing wrong with that for oil. It might well be a case that if you're looking for this continuation to the downside, you have this trend line on from the low of today. You can see we're just coming to sort of test that now. Maybe a breakthrough of that. Ideally, you'd obviously want a bit more volume in, and then you can get a break of S1, and then the lows is the sort of the main target. If you're looking for the break higher, obviously the higher the day, maybe into the afternoon, could be the opportunity to go long. But for now, wouldn't say there's a trade unless you really get a break of that trend line as well. Equities in the US, let's have a quick look over again as they're just sort of testing those key levels to the downside. S&P, if we were to get a confirmed break of last week's low, I would just bear in mind that the low of the 15th and S2 obviously quite soon after. Overall direction, we've mentioned over probably the last sort of 3 weeks, it's been quite undecided for S&P. We've had a couple of tests of this higher sort of range, if you like, and we're now back down to the lower part as well. Will we get a breakthrough? I'd say it's hard to say. Obviously, for now, you've got to be favouring the downside with the sort of the sentiment bias. I think markets I would be focusing on euro and pound, obviously, of the dollar strength side of things. If we were to see any weakness, Aussie dollar would be my sort of the main one I'd like to focus on going forward. Euro stocks key level, obviously dollar yen, so we'll just flip around that yen chart and get that loaded up. Quite a key level. Let me just move that above the camera so you can see here, almost testing that to the downside. There you go, a bit clearer to see. Give me 1 second. There you go, from the 8th and the 4th, key levels there as well. Oil, mentioned that trend line. If you're undecided, nothing wrong with that. Equities, obviously, directional bias has got to be down for now. FTSE continuing to go lower. Quite an interesting morning so far in terms of opportunities and moves. Any questions, obviously, let me know, get them in the chat. I'll be posting a few charts throughout the morning on sort of longer term levels that I'm looking at for the week, and ones to be aware of. But if I don't chat to you guys, I hope you will have a good trading day, and I'll catch you in the room.